Hello and welcome to Crux Investor. We caught up earlier today with Wayne Healy, CEO of Peninsula Energy. We wanted to catch up with regards to their quarterly activities results. We talked to him about the field demonstration, their contracts selling into market for 2021, and obviously the resulting cash in the bank at the moment and what they're going to do with it. If you want our thoughts on that conversation, any of those topics, and indeed the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis on various companies and commodities. There are summaries of other interviews that we've done just to save you some time. There are training courses to help you with your own diligence. And of course, there's commentary from experts from around the world on a variety of companies and commodities. So do go and join our thriving community of intelligent investors sharing their thoughts and ideas on those topics with each other at cruxinvestor.com/club. You can also leave your comments below. Give us a like, we appreciate it. And if you want to see what we talked about, take a look in the description below. Wayne, how you doing, sir?
Doing great. Thanks, Matt. It's good to join you again.
Yeah, fantastic. Do you have a good Christmas, good New Year, all of that?
Absolutely. You know, January's been a really good month. The post-Christmas, things seems to be settling down. Companies like ours have had good runs on our share price, and that seems to be settling into a good phase. I think investors have positioned themselves really well for an upcoming run in uranium. So, you know, it's been a very nice month, and it's been a chance to regroup as the new year sets in.
I think, I'm hearing the same thing. I think a lot of, obviously, most of you guys went up 2-3 times, December or early January, it softened a bit, but it seems these generalists are timing it beautifully. They're coming in and positioning themselves for what they see as a sort of a strong second half of this year.
Absolutely. There's a lot of enthusiasm and everybody's reading the market right. There's compelling reasons to be thinking about uranium supply and demand fundamentals, lacks of inventory in the market and a certainty that utilities will be picking up additional, uranium probably through contracts. But the demand side of things is really strong and the supply side of things is really weak. So anybody who's looking at uranium now is looking at it for all right reasons.
Yeah, I think so. I think some, this is why people say sometimes timing and luck is what you need in investing, not necessarily intelligence. I think I'm living proof of the latter bit. Right, we better talk about some of your
announcements. You said it, not me. I'm just saying it.
I had to. I knew you were going to. We better talk about some of your announcements because your quarterlies have come out. Nice, not bad. You happy?
Yeah, thanks. Peninsula had a good quarter ending in December. We brought out our announcement this week. We had a net cash burn for the quarter of only $1 million. We had revenues from contract sales of about $1.4 million net revenues. And we accomplished a great deal in the fourth quarter. So, we're not sitting on our thumbs, but we're also not burning a great deal of cash. All of the positioning that we were going through the course of last year has really come home now. And the company is sitting comfortably with a game plan to advance the Lance project to get it ready for production. And we can do it within our means. We have the cash, $8.4 million at the end of the year. We have revenues in 2021 from our contract sales that could be $6 to $8 million. Again, the news that's coming out of the company is all very good, and it's a good time to be, in charge of Peninsula Energy.
Yeah, it seems like it's easy to forget that you're actually a producer with contracts and you can sell into the market. Not too many of those around. Talk to me if you can about the OTC listing that you've kind of upped your game a little bit there. It seems.
Right. Well, our only listing is on the Australian Stock Exchange, ASX, and our symbol is PEN. But we've long neglected the U.S. investors who, are often very interested in our project. It's U.S. based. It's in Wyoming, and it's our story is really one of a U.S. producer with an Australian listing. This month, the month of January, we went out and upgraded our access for U.S. investors. We moved from the OTC grays, which is the space of neglect, where nobody pays attention to the grays because they're markets that are companies that aren't reporting and aren't doing anything with the OTC. We uplisted to the OTC pink sheets or pink markets for the time being, and we've applied for the OTC QB markets, which is a transparent marketplace where U.S. investors can acquire foreign shares or shares that are listed in foreign countries and trade them with transparency. And there's a market maker and an orderly market. So the orderly market for the pinks is fairly decent, but it's not where we belong as a company. We're not a speculative junior company that's in and out of bankruptcy or whatever. We're a solid company that does full listing and full reporting on an exchange. We don't belong in the pinks, but it takes a little while for OTC to process our application, and we qualify for the QB markets, and we'll be there soon.
Good. Pink, the pink sheets. No, it's something that we would totally ignore. What are you doing in there? But at least you've got a market maker. I mean, what's he doing for you, or she?
Well, since we got a market maker, working with trading our shares on the pinks, we've gone from about 40,000 shares per day, which is what we were trading with the grays, which is nothing, and rightfully so. But we've gone to about 700, 800,000 shares per day trading on the pinks. And I think when we move to the QB, we'll probably see double that. I've looked at a lot of companies when we were making this decision. It's a cost-effective way to gain access for our potential investors. But I looked at it, and a lot of companies with single listings or in particular uranium companies are seeing 20 to 30% of their daily market volume trading on the OTC. So 4 shares trade over in Australia and to 1 share trading in the US. It's a big boost to the liquidity of the stock, and it's really an enhancement for the access for US investors to be able to trade during their daytime hours with their home currency, which is the US dollar.
Okay, but what's going to move it even more? If you can talk about the progress of your field demonstration, how's it going?
The field demonstration was part of our announcement for the quarterly. We started a field demonstration back in August with 3 full-scale patterns. Really and truly, the progress on the field demonstration has been very satisfactory, but it is a 12 to 18 month endeavor. So, the news flow is going to come slower than investors really would hope. We're going to have continuous news flow throughout the quarter, but in the field demonstration, the quarter, not just the quarter, but throughout the year 2021, we've been maintaining the target flow rates, which is important, because if the chemistry is wrong, you'll lose flow rate really fast. The acidification of the field, bringing the pH down, we're rapidly approaching our targets, but we're not there yet. And that's fairly close to on schedule. It's really on schedule as far as I'm concerned. Solids management systems, which is, when you put new chemistry, geochemistry into a system, you sometimes generate fines. We noticed that when we did a field leach trial previously. So we designed some solids management systems, and those solids management systems are doing exceptionally well. We haven't had problems with fine solids. All of the things that we were expecting are being demonstrated, which is the purpose of the field demonstration.
Good, because it's harder for people to understand ISR than it is drill results, because that's more common. I know obviously uranium is 50% of it's produced by ISR, but it's not necessarily a North American feature. So when you say we've got lots of results coming back over the course of the next 12 months or so, I mean, how do you get a sense of that things are going the right way, they are delivering the results that they want? What should we be looking out for?
Well, I think that, the key today is, have we been able to maintain the flow rate? And that's a definitive yes. We designed for 75 gallons a minute in this demonstration, and we've been maintaining 75 minutes from the start to today. we have to deliver water into the formation and chemistry into the formation to dissolve the uranium. I've told you once before, water is our miner. We have to put that water down, and the way we do that is with flow and flow rate. We've been doing very successful demonstration on that. We maintain our flow rate very well. And that means that the chemistry will come to the point where uranium solubility will be good. And we'll see the uranium recovery curve develop over the course of the coming months. Today, uranium is coming out, but at still a fairly low level because we're not at our target chemistry. A little more flow, a little more time, target chemistry makes it to the formation and comes out.
Okay, but it's expected. So when you used the word earlier, it's satisfactory. Is that you being just cautious, or is it not meeting expectations?
It is meeting expectations, man. I'll be clear about that. The field demonstration is right on track.
Beautiful. That's what I want to hear. So we'll look out for announcements from you over the coming months. That's good news. Do you mind if I kind of bring it to the macro a little bit here? And we did talk over the Christmas New Year period about U.S. uranium reserve. The Biden government seems to be moving at some pace. And it's featured on quite a few things, but energy's been a big part of that. Are you hearing anything with regards to the $75 million? In terms of, are they reaching out to companies? Do they want to, do they need your feedback into this decision-making process? I mean, what's the next step?
Yeah. What's next for the uranium reserve is that the Department of Energy is likely to come out with a request for information from stakeholders like companies like Peninsula and other stakeholders, and a request for public information on how they should go about acquiring uranium and what criteria they should use. No decisions have been made on that front, and I don't think that anybody is representing that they have been. But the process will take time. The government is moving forward, and the Biden administration is very clearly supportive. We've been having hearings of political appointees, and particularly the Secretary of Energy. And in the hearings, the question is, what's your position on the uranium reserve? And the answer has been, I'll respect the wishes of Congress. This is, Congress funded this, and we will enact this. The Biden administration has got a very clear clean energy agenda. And we believe that uranium and nuclear power fits into that mold very, very well. I mean, this is the first full week of the Biden administration and President Biden being in office, and he's done an awful lot with respect to clean energy, with respect to the environment. You name it, he's been on top of it. But so far, what I've seen from the Biden administration is positive and good views for mining and the importance of mining critical minerals, and good news for nuclear energy and the importance of clean, carbon-free energy in our base load in our system.
Okay. In the meantime, companies like Kazatomprom, like Cameco, are talking the language of having to buy products in the open market on spot markets because their production has been curtailed. I think COVID continues to be rampant in Kazakhstan. Something ridiculous, like a fifth of their staff unable to work because they've got COVID, and the rest being kept away, kept at home. How does that hamper or aid your ability to fulfill your contracts?
Well, look, we have been using the spot market or acquiring material in the markets to fulfill our contracts, and that's simply because the price of uranium today in the spot market is still below our expected cost of production should we put our project back in. But for 2021, this year, we've already gone out and secured contractually all of the material that we need to satisfy our contractual requirements. So there's no impact. The spot market could go up significantly. That would be great. And that won't change our economics at all. We'll still be guiding towards a $6 to $8 million net revenue on our contractual deliveries this year, because we fixed the purchase price already. And the only reason there's a range is because the delivery price is base price escalated, and the escalators haven't been set yet. We don't know what inflation is going to be.
Okay. So I'm kind of interested, not only from your perspective, does it dampen your ability to attain that income, that margin, but the wider context of the market and just soaking up some of this loose inventory, which again is a slightly opaque market. No one's quite sure where it is and how much of it there actually is, and when it will be completely soaked up.
I'd like to comment on that. Yeah, we had a big year of soaking up material last year in 2020, and there is a big question mark as to how much additional material is available for spot purchases. Will it be a big quantity, or will the demand in the spot coming from producers to deliver into their contracts, finally drive the price quite a bit higher? And I know that the spot price leads the long-term price. So rising spot prices mean long-term contract prices will also rise. I think this is the year. The stage is set. We're losing primary producers that produced material and sold into the spot. Less and less material is becoming available for the spot, and more material is being drawn out of the spot. What else could happen? There's just simply, we're consuming inventory that's on the surface today, and we're moving towards a higher price environment, and it just seems inevitable.
Yeah, we've seen that with the enriched material too, as the prices have been driven higher. That would suggest that the stockpile or the inventories are reducing somewhat as well. Okay, well, sorry to bring it back into the macro. I know you want to talk about Peninsula. So, how are you laying out the stall for this year? Because quarterly's out, lovely. Second half, I think most commentators are suggesting that some decisions will need to start being made then in terms of term contracting between now and then. Spot price seems fairly soft, hasn't really moved in quite a few months now. How do you deal with that as a CEO?
Right. Well, we've re-engaged talking to fuel buyers, and we're looking at what their opinions of prices are going to be, and the opportunities to sell into the market at prices that are favorable for our restart. We are preparing our project for restart in a lot of ways. The field demonstration is a great example. Doing the field demonstration means that when we go back into commercial production and we do it with low pH rather than alkaline, that we put our best foot forward. So as long as we have time to run the field demonstration and continue to obtain learnings from doing important testing at a field scale, the longer we do that, the better off we'll be when we step into commercial production. So, but at the same time, our board, our folks are evaluating the timeframes and our requirements in our contracts as to when we need to be putting our project back into production. It won't be so long. Peninsula is an inevitable producer. Whether or not the market changes a lot, we have contracts that ask for production from our site. So, we're preparing for that. We're getting ready to put the project back into production sometime in the near future. It may not be 2021. We have our contract satisfied for 2021, but down the road we will be producing again. It's inevitable.
Okay, it's inevitable, and the field demonstration is for your benefit to make sure that you're doing it the right way. But ultimately, it's so you can talk to these utility buyers, these fuel buyers, to say we've got the formula right, we're getting the production that we want, and we will be able to meet any contracts that we sign with you, because they need certainty of your ability to do that. So what are the questions they're asking now? Or is that the case of you said, we'll be good, let's talk again in 12 months? Or, what's that conversation look like?
No, it's 2021 will bring some buying by the buyers. They're not ready yet, or they're not contracting yet. There's still good opportunities for them to fortify their inventories through the spot market until the spot market starts to rise. And when we see that spot market rising, I think the utilities are going to make a pretty quick shift towards securing mid and longer term supplies contractually.
Right. Okay. So it sounds to me like you're good for cash. You've got more cash coming in this year off the back of your contracts. G&A overhead seem quite low. The net number seems very low, as low as it's been for a long time. And you're proving the case for your technology, your flow sheet, saying to the market, it will work. It's inevitable. It's just a question of time to get to where we need it to be. Okay. Interesting.
Well, the other aspect, Matt, is just that our contract book is has us moving towards a position of being a producer. But we're interested in more contracts because the more we can layer in, the better we can secure the cash flow, and the more motivation we have to increase our production and lower our overall operating costs or when I say lower, volume is the key to getting better unit costs. So producing at a higher volume for additional contracts is really what we're looking for in the market. So we need to layer in additional contracts to accelerate the production decision for our project.
But how do you do that? Given your current state, I mean, how do you go and get more contracts? Why is anyone going to give you a contract?
Well, that's it. They want to do business with companies who are producers, proven producers, have a track record, and are capable of delivering. I think we've positioned ourselves there now. People are beginning to understand, yes, the low pH is going to work very well. This company has a motivation to be back in production sooner, more sooner than most. And, since they will be producing, let's put a piece of our requirements with Peninsula.
Yeah, but just on that, you have been a producer. You have a team that understand uranium, at least. Well, that's quite unusual in some uranium companies at the moment. But you've got a process which is starting to work. You're showing it's got beginnings of being able to work, but it's not working yet. So you're talking the language of getting more contracts, but talk to me about the timing of getting more contracts given the current situation.
Right. Well, for us, the price has to be right. So the current situation doesn't have the pricing right. So we have to wait for the market to evolve just like others. And I think that, when the market evolves, we'll be at the front of the pack with a proven project and a quick time frame to put the project back into production. So I think that we're in a very good position to negotiate contracts with fuel buyers, utilities, and with the U.S. government when they do come to market to look for inventory or materials for the U.S. Uranium Reserve.
Right, but that's you on the front foot taking a very bold stance and saying that's a factor which I will control. I will make that decision as to when we do it, and it's based on price in the market. But likewise, utility buyers, fuel buyers have got to be looking at you and going, well, I need that company to get into a position where I'm comfortable, and that's got to be around show me and demonstrate to me that you can deliver against a contract if I give it to you. And so I'm questioning you as to when are you going to be able to time that?
Maybe I missed that because we've been delivering into contracts all along. We've already proven that we're a reliable supplier.
But that's a different game, isn't it? You're a reliable spot buyer and selling into market that way. I'm talking about your production capability, because at some point, if price does move, margins fall away, right?
Which is exactly why we're doing the field demonstration today, is to show without a doubt to the market that this technology works at this site. We've done it on a lab scale. We're taking it to the field scale, showing that with commercial operations we can produce uranium successfully And I think without a doubt, by the end of this year, that's going to be understood better than it has been, that the Lance projects in Wyoming are a reliable source of uranium.
Right. That's what I wanted to hear, because you know what I mean? That your business model is not being a future spot buyer. What people are buying into is your ability and your company's assets ability to produce uranium and sell it into the market and make some money. That's the model that works for you. Otherwise, at some point when your current contracts aren't able, I know you're done for this year, so that's all good, but going forward, buying is not what you're about.
That's very clear. We're not here to be a trader. We're here to be a producer. We have all the people, the projects, the permits, everything in place to be a producer. I think there's a lot of reason for fuel buyers to have the confidence that we will be a reliable supplier of produced uranium in the future.
I don't doubt it. Anyway, just needed to hear you say it. Thank you very much, Wayne. That's well done on the quarterly. Some nice numbers, very encouraging. Well done on the field demo. That seems to be heading the right way. You've got to stay in touch. Let us know how that goes on and how that proceeds, because I think that's obviously the key to significant future growth for you.
Thank you, Matt. It's been nice joining you again today, and I look forward to updating you again in the future.